All right. Good afternoon. Hello, hello. Thank you for joining me this session. Hey, Jax. Hey, Indrek. If you can hear me okay, if you can see me all right, let me know into the chat. And then we'll give it a minute or two and we shall get started. Thank you so much. Fantastic. So today we are going through the live market analysis. Quite a bit of news happened. Well, one big news happened over last week, the end of last week. So I'll go through that. And also, if you have any questions, please feel free to put it into the chat, put it into the Q&A section. I'll be happy to answer your questions, guide you through any possible questions you have, trade-related questions you have. If you want me to look at any charts in particular, I can do that as well. Alrighty. So again, let's give it a minute before we get started. Thank you for attending, for joining us early. I hope you have your questions ready. I hope you've been trading well. Hey, Jack, have you been trading? How have you been trading? How is your trades going? There we go. Okay, so let's get started. As I was telling you guys, all right, cool. All right, as I've been telling you guys, today is the 29th of August, Monday. We are going through the live market analysis here. So, on Friday, we had the Jackson Hole Symposium with the Fed Chair Powell speaking. So I'll go through a bit of details of that. We'll show you how price has moved and what else to look out for this week. We actually do have quite a number of big news to be released. Not so much today, but later into the week. All right. So with that, again, if you can, let me know if you have any questions into the chat or into the Q&A section. I'll be happy to guide you through that. And as usual, what I like to do is to ask, put into one of those areas, let me know where are you tuning in from. I always love to find out where is everyone tuning in from. So do that as well. And while you're doing that, what I'll do is I'll get through a bit of the disclaimer. So as usual, before we do any webinars, just want to let you know that any information, context, or opinions which are expressed in the presentation and the following slides and charts that we share are solely those of the presenter, not necessarily those of Vantage, and are solely used for educational purposes only, as they do not constitute investment advice and or consultation on how a client should trade, right? So basically, if you are going to be jumping into any trades, make sure you do your own analysis, make sure you do your due diligence, check the trades, check the margin, check the leverage, make sure you don't over trade or over leverage, because in my experience, that's one of the biggest things that would impact or destroy your trading account the fastest and the easiest, right? So just make sure you do your own due diligence, don't over trade, don't over leverage while you go through this trading journey. All right, with that, just a quick introduction again of the team here. I'm sure you all know Desmond as well. I'm one of the prop traders here. My name is Jin, or everyone calls me Jin. My name is Jin Dao. So I'm here to help you through your trading journey. For myself, what I do is I do a lot of analysis. I approach the markets a little bit differently. Most traders I know of, or I've coached, approach the markets with a bit more of a technical view. The first things they do is jump onto the charts, look at the technicals, I approach it a little bit differently. I always look into the economics first. I look into the fundamentals. I pay attention to the news. With that, I get a view of where markets should be heading, right? Whether prices should be going up or going down, or if there's no clear directions. Then I look into the charts to tell me whether it's a good time to get into the trade or not. So, for example, if I'm looking at a news on the pound dollar, expecting it to drop, expecting it to go further lower, but I actually see price moving towards the upside, I'll sit and wait out. I'll look for rejection of levels before I get into a selling opportunity. All right. If it continues to go up, then I'll probably look into some other pairs rather than to try and do a short-term buy towards the upside. Okay, so that's how I would normally, for me, I approach the markets. One of the views that I've had, or one of the ways that I coach and share my ideas, is that I always believe that there's not one strategy, there's no one strategy that will fit everyone, right? Every trader is different because of your capital amount, because of your risk appetite, because of the time you have to spend in front of the screen, or the time that you have to spend outside of the screen. Okay, so every trading strategy for everyone is going to be a little bit different. What you should be doing, putting it all together, finding a strategy or finding a method that you're most comfortable with, right? Make sure it gives you a good result as well, and then stay on that strategy. Okay, so not one strategy. You don't have to follow the way I trade or the way any particular person trade, because it might not fit what you want to do exactly or how you want to trade exactly, but you can actually pick up bits and pieces, tweak it so that it fits to your own trading characteristics. Okay, so with that said, let's look into the news. Oops, let me bring that up. Okay, so as usual, my first point of contact is always Forex Factory, right? I jump onto Forex Factory just to check out where the news is likely to be heading, where it should be, or what's coming up. And in this case, I'll show you what's coming up first, because that's a lot more interesting, is that for tomorrow, we do have some PMI or some CPI numbers for the Eurozone, the German preliminary CPI, right? So it looks like it might still be increasing a little bit. It was a 0.9, expected a 0.2. Just for the German CPI alone, looks like it's still going to climb a little bit. Moving on from that, we do have some consumer confidence numbers and for the US, and it looks like we might see a bit of an uptick from a 95.7 to a 97.4. Right? Consumer confidence is important when it comes to looking at your trades, because confident consumers spends more. As they spend more, we're going to see more retail sales. We're going to see possibly economic activity increase as well. So consumer confidence is going to be important. From that, on Wednesday, we do have a whole bunch of news, but not big price movers all the way till the Euro CPI numbers to be released, right? Flash estimates year on year for the Euro inflation data was in 8.9, expected a 9%, core CPI from a 4, expected a 4.1. So we're still looking at the Euro inflation still climbing slower than before. I can show you that before it was an 8.6, it came out 8.9, 8.1 came out 8.6. So that's a big jump there. But at this point, looking like it's going to be a small increase in terms of inflation data from the Eurozone. That might actually be a good thing. That might be a good thing, because the ECB is possibly looking at increasing rates further, right? Looking at a 50 basis point increase at the next meeting. But I think that given their last 50 basis point increase, and if we do see inflation slow down a little bit, the next 50 basis points increase could have a more significant impact on inflation. So that might be good news or slightly better news for the Eurozone. Following on from that, we do have the US ADP non-farm employment change. That's a private calculation of the non-farm numbers. Was 128, expected 310, right? Was 128K, expected 310K. So we're looking at, hey, looks like it might be good employment numbers for the US, but remember that's the ADP number. It's not the US Bureau of Statistics number. So you'll wait till Friday for that. We do also have the Canadian GDP to be released, looking from a 0%, and I'll show you previously, it was a 0.3, expected to be a negative number, and minus 0.2, came out at 0. Good news there. And now looking like GDP might increase slightly on a month-to-month basis from a 0 to a 0.2%. Okay, so Canadian GDP looking like it might move up a little bit there on Wednesday. Then moving on to Thursday, we do have the Swiss franc with their CPI data. Again, not a big change expected there. I don't think this will be a big price mover, but what you want to pay attention to is on Friday, where we do have the US non-farm employment change number, the US average hourly earnings month on month, and also the unemployment rate, right? Big US employment data to be released first Friday of every month. This time, 2nd of September, first Friday of the month. Looking at unemployment rate staying unchanged, 3.5% previously, looking to stay at a 3.5% there, but non-farm employment change number looking to go from a 528K, which was a big surprise. I'll show you previously. It was a 398. It was revised to a 398. It was a 372. Forecasted was 250. Came out at 528. Very good employment numbers there. This month again at 528, expected a 295K. Could we see another big surprise to the upside on the non-farm payroll employment change numbers there? If we do, that's again going to give the Federal Reserve good confidence, right? Good confidence that the US economy is still doing well, it's still relatively stable, despite the negative GDP's data that we have been receiving from the US. Okay, so negative GDP quarter on quarter for the US have indicated technically that the US is in a recession, but Federal Reserve members, or several Federal Reserve members, have actually indicated that, hey, despite the negative GDP quarter on quarter, employment numbers are strong, people are spending, consumer confidence is increasing. It doesn't look like the US is in a recession. So if we do see a strong non-farm employment change number there, we're going to see again more confidence for the US or for the Federal Reserve in terms of how the economy is performing. At this point, what I always suggest is don't try to guess what the non-farm number is going to be. It could really range, as we've seen here. A big surprise was 372, came out at 528. No one expected that. At this point, we might see something at about a 300 level, maybe even a 350 thereabouts. But try not to guess what the non-farm number is going to be. Wait for the news to be released, and then see the reaction onto the price, then get into the charts. I'll get into your trades from there. Next thing to pay attention to is also the average hourly earnings month on month. You can see here, previously was a 0.5%, expected this month to change by 0.4%. So again, average hourly earnings doing quite well for the US, or expected to do quite well for the US. With that as a whole on Friday, with the employment data to be released, it looks like we might actually see quite a stable, possibly quite a stable data release. And there's no Canadian employment numbers to release, not a lot of news to be released at that point. So we might actually see quite a good reaction here on the dollar index. Okay, why I say quite a good reaction here on the dollar index is because of what happened last Friday. Any idea what happened last Friday? All right. For those of you who just joined us, welcome. Again, if you have any questions or you have any things that you would like me to, any charts or currency pairs that you'd like me to look at, please feel free to put it into the chat. I'll be happy to jump onto that for you as well. Okay. So with that, what happened on Friday? We had Fed Chair Powell speaking at the Jackson Hole Symposium. Right, the Jackson Hole Symposium is where major central bank chairpersons attend, finance ministers attend to discuss about monetary policy, to discuss about economic data and performance for their individual countries. And in this case, what Fed Chair Powell spoke about or commented was very crucial. Okay, was very crucial. We saw a big move there on Friday because the two lines that he said was that the Fed could keep lifting rates sharply for some time. All right. So the Federal Reserve could keep raising or hiking rates sharply for some time. The last time they did a 75 basis point, right now they're expected to increase rates in September by 75 basis points again. Before this news, markets were actually expecting the Federal Reserve to possibly slow down on the rate increases, right? Slow down the rate increases by increasing rates by 50 basis points or possibly even less, or to increase by 50 basis points and say that, hey, they might stop earlier. With this statement that the Fed could keep lifting rates sharply for some time, that gives a very hawkish view from the Fed that they might keep increasing rates, more dollar strength, which actually led to the dollar strengthening and also equity markets turning towards the downside, given that they were expecting rate increases. And if rate does increase, we could see economic activity drop further for the US because, as rates increase, we're going to see usual impact is that the GDP drops because money gets moved away from the financial markets into a bit more of a risk-free instrument. With that as well, the Fed has signaled that more interest rates are coming. Where was that one more line? Let me find that one more line. I've lost it. Fed are going to increase with more. I think that he was saying something that he was going to increase rates further and for longer. Okay, so with that, what we actually saw is that here on the dollar index. Oops. Okay, hey there for all of you who just joined us. I see a hand up there. Welcome, welcome. If you have questions, please put it into the chat. I'll be happy to jump onto that for you. Let me load up my layout. All right, here we go. Why is my layout not loading? Let me just check this out. What's happening here? Okay. So here on the dollar index, clear out some lines. Okay, we saw that. I'll bring it to the 1 hour time frame just to show you what happened here on the 29th when the news was released. You can see here that the news was released at, change this to a GMT plus 8. Okay, you can see here that Fed Chair Powell spoke at 10 p.m. GMT plus 8, which is why we saw here. Oops, there we go. That took a while to load. but we're ready to go. Okay. Here we go. So you can see that, clear all that out. At 10 o'clock on the 26th, we actually saw the US dollar bounce off that 107.80 level straight towards upside, went towards 108.34 within the hour and continued climbing up, reaching that 109.40 level as the news got released and as the dollar index got stronger because of comments from Fed Chair Powell. Okay, so that's what we saw push towards the upside. At this point right now, what I'll do is I'll put this in and show you that the last time we broke above this point was back in 23rd of August at 109.29 or 109.30. So didn't like that upside. It's retracing back down again. If I went to the H4 time frame, you can see that again, if I drew this right across, the last time we got there, 14th of July, hit that level, came straight back down. Again, 23rd of August, hit that level, retraced back towards a 108 level, and now breaking higher, but retracing back down again. Okay, so I'm looking for, in this case, whether the dollar index could break towards the upside. Is the strength of the US dollar going to continue because of the comments, or are we going to see it retrace back down? Some things to consider at this point will be a possible upward channel, right? If we just took the body there, an upward channel towards upside on the dollar index. Look at that. You can see they're supported over a couple of times. So now that's broken that, tested that level of 109.50. We see it turning back down again. Could come back down towards the 108.75 level before bouncing back up again. I think that this will be an initial reaction here on the dollar index. We're going to see further upside. Why I think we're going to see further upside is because of what we see, you know, from the Fed Reserve. If they do come out tonight and talk further about further rate increases, hey, we could see the dollar push higher. This reaction is likely because of some profit taking from over the weekend as they close off the trades and look to push it back up later again. First target level I would have is at 110, is at 110. If I did that, just to show you, oops, where are my lines? Here we go, put some levels in. You can see that we see this pushing towards the upside. I'll put in one more there. And that extension there is about 110.52. That would be a level that I'm looking for the dollar index to move towards. All right. Hey, how are you doing? Good to see you. Thanks for joining us from Nepal. All right. If you have any questions, let me know which charts or which pair do you want me to look at. I'll be happy to do that. Okay, so this is the dollar index. I'm looking for this to possibly come down, bounce off this level, and push towards the upside if we do see further dollar strength come back into play. I think this is a short-term move, a brief move towards the downside, similar to what we saw here. We saw it bounce off this 23.6 level to push up. So I'm looking for it to test this diagonal trend line to push higher again. All right. So that's my view on the dollar index. And because I view, a short-term down to push back up again, this would actually influence my analysis through the other pairs again. All right. Hey, Ronald, how are you doing? Thanks for joining. So looking at the pound dollar here, remember I'm looking at it on H4 time frame to start. And if I find anything interesting, then I'll go down to the H1 time frame. But I would say that most retail traders or most traders could just stay on the H4 and do very well from that point, right? So you don't have to go into the super small time frame. You could just look at it on the H4, H1, and there'd be more than enough in terms of trading ideas and trading opportunities from there. So the pound dollar fell because of that news on the 26th with the Fed chair speaking. It tested, you can see here, it tested that level, which was at about that 1.19 level, and fell strongly to reach that key support level of 1.1650 or 1.1651. Right now, bouncing back up a little bit. We're possibly looking at it retracing before turning back down again, because I'm expecting further dollar strength to come back into play. How far can it turn? How far can it retrace before turning back down? Some points of consideration. Right, we could see it come back up. Firstly, let's see whether it will climb towards this level at 23.6, and which also falls very nicely at a round number of 1.18. Right, if it hits that round number, rejects that round number level, we could see it turn back down. If it breaks above, then 1.19 before turning back down again. If it goes above 1.19, then I wouldn't so much be considering for a possible downward move. I think that if it breaks above that level, right, the 1.19 level, we could actually see a stronger recovery there on the pound dollar, just as a reaction to move towards the upside. I wouldn't be looking for a big move towards the downside yet. Okay, so in this case, if immediate targets or immediate levels will be whether it can react to that 1.18, turn down from there, or turn down from the 1.19 level. Ultimately, if it breaks above 1.19, I think that it would have significant upside, possibly towards a 1.20 before turning back down, which coincides with the 61.8 level. I wouldn't be looking for that so much or that so much. I'll be looking for either of these two trades to look to sell the pound dollar lower. How far down can it go? We do have the next level there at about 1.15, and not an immediate target, but a very key support level at 1.13. Right, so anywhere in between these levels will be a good target level. I'll be looking for a selling opportunity. In this case, an example will be below. If it turns down from this point immediately, you could look at below 1.16, a tight stop loss of about move it up a bit. 1.16, tight stop loss about 60, 70 pips, a take profit of about 100 and almost 120 pips, almost a 1:2 risk-reward ratio towards the downside there for the pound dollar. Okay, so I'm looking for either a bounce back up towards the fib levels and reject, or a breakdown from this support level towards that 1.15 level as an immediate target. Okay, so far no questions yet. With that, I'll jump into the next one, the euro dollar. Okay, euro dollar has been doing very well. Let me do that. So the euro dollar has been doing very well. Saw a lot of volatility on the euro dollar, really because it broke below that parity level. Let me take that away. Right, it broke below that parity level, and it has struggled to find sustained downside. That first move breaking parity at 1.00 level, tested that 99. If I drew all the way down towards that point, that 99 level, 0.99 level, bounced straight back up, tried to break above parity, failed, came back down again, tried to break, couldn't sustain a move, turned back down. This was a strong move towards the upside, right? A strong move towards the upside. but it shot up and turned all the way back down. It climbed up in the lead up to the news event, but it shot all the way down because of Fed Chair Powell's comments on interest rates, and it still came towards that 0.99 level, but failed to break it lower again. So the euro dollar right now seems to be trapped in between these levels, right? Seems to be trapped in between 0.99 and 1.00. A good, not a very good range, but we do see some spike outs towards that 1.01 level before we see a quick spike out towards that point before a quick retrace back down again. In terms of the euro dollar, what I would be looking for is still that selling opportunity. So either take that away, let me just remove some lines. So either look for it to push up towards that parity level, in this case, and look to sell it down, or to look for it to push up and turn back down again. So I'll still be looking for it to test those round number levels before selling back down. And those levels, if you tested it, it actually coincides with a couple of key fib levels. You can see that that 38.2 level has held very strong over the last couple of attempts, or the last attempt to break higher, came close before turning back down. In this case, the 23.6 level has actually broken before turning back down again. So I wouldn't consider this level too much, although it is a nice parity level, right? I could see it come back up and turn down, but I would pay attention to this a lot at that 1.010 level. Could climb up and turn back down again. Still looking for that selling opportunity there on the euro dollar. All right, so you can see here that just based on the first two pairs, I'm quite bullish on the dollar index. I'm quite bearish on anything against the dollar. That's if we do see that strength of the dollar continue, right? If we do see that strength of the dollar continue. What if we see the dollar weaken? All right, what if we see the dollar weaken? One possible consideration is on the US yen, right? One possible consideration is on the US yen. Why so? It's because similar to the dollar index, the US yen climbed up, came very close towards that 14th July high of 139.37 level. Okay, it actually came towards that 139 level at this point. If I did draw another line across at 139, and now it looks like it's turning back down again. Okay, so if we do see that dollar weakness come back into play, even if it's a medium term, short to medium term weakness, we could see the US yen retrace from that high point. We've already seen it, happen once here. Tested, traded lower. Again, tested here and traded significantly lower. What's going to happen here? We're looking to see whether it's going to test and reject this level and trade towards the downside in the event that we see that dollar weakness, right? So how far down could it go? I would say I'll draw that up there. It could come down towards this 23.6 level, which is also why we saw that consolidation around this points. So we could see price come back down almost towards that 137 level before a possible bounce back up again. Something to watch out for there. A little bit of a contrarian view on the US yen. If we don't see that dollar continue to strengthen, we could see this reject that resistance level or the high level, turn down towards 137, gain some strength, gain some momentum from that retrace to bounce back up again. Things you can be looking for here in this case will be a possible selling opportunity at this point. relatively tight stop loss at about 50 pips, take profit at about 100, a 1:2 risk reward ratio towards the downside. Bear in mind, this is a big counter trend trade, right? This is a big counter trend trade. So for those of you who are a little bit more risk taking, you could be looking to sell it down towards that 137 level. For those of you who are a bit less risk taking, you're a bit more risk adverse, if then you think that, hey, I'm still looking for that dollar strength to come back into play, look for the price to drop, to test that 137 level and bounce back up. How high can it go? We have an extension there. We have about a 140.88 level. So we could actually see, in this case, just to draw it out for you, a possible move towards that resistance level. How they will look on the charts, or in terms of a trading opportunity, you could be looking to buy if it comes down, test that 137 level and bounces. You could be looking to buy at about 137.60. I would say, hey, take profit, a big take profit of about 300 pips towards the 141 level. Stop loss very tight at about 60, 70 pips. Let's put it 70 there. A 1:4 risk reward ratio towards the upside there on the US yen. This would mean that you have to wait for it to drop, wait for it to bounce off that support before buying. As it trades higher, one point of consolidation or one point of hesitation would be between that 138 and 139 level. Okay, so you could have a first take profit of about 160, still a 1:2 risk reward ratio towards upside, and then an ultimate take profit at about 300, a 1:4 risk reward ratio towards the upside. Okay, so a bit of a short-term, long-term trade here on the US yen. Possible short-term downside move before push up. If we don't see it trade lower, if we just see it push towards upside, then you could be looking for a buying opportunity above 139.40, right? Above 139.40, a short-term trade towards that 141 level. Okay, so very interesting there on the US yen. So far, any questions from anyone? Not just yet. Fantastic. I hope you're gathering this. I hope you're getting good information here. Please let me know if you have any questions. I'll be happy to help. And let's look at the Kiwi dollar. So I go through the majors here. So the Kiwi dollar has dropped. Look at how much it has dropped by since the 12th of August, when it was at about that 0.6450 level. Had that big drop since the 12th of August. Right now, trading just above that 0.61 level. In fact, at 0.6110. All right. So again, if I zoomed out, just moved it a little bit across, you can see that 0.61 is a key support level. Right, just put it lower. 0.61 is a very key support level. We saw a lot of volatility at this point. We saw a brief break towards the downside before that big upward move again. Okay, so if I move, it's just zoomed out, you can see that this was a level that we haven't tested for a very long time. And then it broke, tried to break lower, couldn't sustain a move towards the downside before pushing up again. At this point right now, because of that big downward momentum on the Kiwi dollar, anticipation is that we could see further downside, but we might see a brief retrace first. Hey Anne, thanks for joining. Sure. So hey Razak, I haven't gone through gold yet. That will be coming up shortly. Good for you to join us. All right, so in terms of a fib level, in this case, what I would do is at this point, where is it? I'll go from this top to all the way down to this point here. So you always want to go from left to right. You find the highest point to the lowest point. If it does bounce towards the upside, it could come towards that 0.62 resistance level before turning back down again. One more point I would look to test is the short-term range. All right, so again, the short-term range, we could see it test near that 0.6137 and possibly that 0.6158, but I think that's a bit too messy. All right, so at this point, I'm looking to see whether the Kiwi dollar can climb up towards the 6150 and turn down, or is it going to turn down from that current point towards that 0.60 level, that round number level? Okay, so in this case, what you could be looking for is to either wait for it to move up and turn down, or to wait for it to break from this level towards the downside. I'm not sure whether it will turn up that significantly because there is no news, right? As we went through the news for this week, there's no big news for the Kiwi dollar, no big reasons for the Kiwi dollar to push or the Kiwi to push towards the upside. I think we might actually see it consolidate around this level before breaking down if we do see that dollar strength come back into play. So I would say below 0.61, then I'll be looking to sell down from lower than 0.61. In this case, stop loss at about 20 to 30 pips, take profit about a 80 pips, almost a 1:3 risk reward ratio towards the downside there on the Kiwi dollar. Bear in mind again, this is at a very low point. Last time it dropped all the way to 0.6060 before bouncing back up. We could see that have a lot of volatility below this support level, but I think that if we do see a stronger dollar, we could see this push towards the downside. All right. Hope I answered your question there, and on a bit of the fib. Let's go through another example here on the Aussie dollar. Okay, Aussie dollar moving very similar to the Kiwi dollar. You would notice that big downward move right now, bouncing back up a little bit, also because it's reacting to that 0.6850 level, right? 0.6840 level. So here, a little bit differently is that with that move towards the downside, we could actually see the Aussie dollar climb. What's more likely, we could see it climb back up towards this consolidation area of about 0.6880, right? We can see that it coincides with that 23.6 level. 23.6 level here. We saw that consolidation area there. And also if I dragged it right across 6080 here, you can see that this is a point where it tested and bounced off. Here, tested this level here and bounced towards the upside. Tested this level here and bounced firstly and again. And then most recently tested this level and bounced towards the upside. So I'm looking for possibly if the Aussie dollar is going to climb up, test this level and turn back down if we do see that dollar strength come back into play. If we don't see the dollar strength come back into play, this could push higher. But I think that even if it does push higher, I'll be more interested to sell the US yen down rather than to try and buy the Aussie up, just because of how it's been dropping since that news. It turned down from the 0.7 level all the way down towards 0.6845. Now bouncing back up, I think we're going to see it. In my view, I think we're going to see it bounce up, test, and then break down again. If it does break lower, the next key level would be at about 0.67, 0.67 of the next key level for that downside opportunity. We had a level there. All right, and then so you'll be looking for a possible selling opportunity below 0.6840, about 0.6830 thereabouts. Stop loss of about 40 pips. Take profit could be about 112, almost 120, a 1:3 risk reward ratio towards the downside, towards that 0.67 support level there. All right, so quite similar on the Aussie and also on the Kiwi dollar. For those of you who are attending, let me know, what do you think? Would this Aussie dollar towards the downside, towards that 0.67 level, be more attractive, or would a Kiwi sell towards that 0.600 level be more attractive as a possible trade? Which would you select, the Aussie dollar or the Kiwi dollar? Put in the chat. I'm looking for your answers. All right. So yep. I would choose the Aussie dollar. All right. I'll choose the Aussie dollar just because even if I went to the daily time frame, you can see that for the Kiwi dollar, the last time we tested below or tested lower from 6.1 from this 0.61 level was way back in 2020, right? The last time it broke from this point was way back in 2020. Quite a far distance away compared to the Aussie dollar, where the last time we broke from this point towards the downside was only in July last month, right? Pretty much last month. So it looks like that support level is more recent. More likely that if we break from this point, we're going to see it reach towards that target level more realistically than a target level from back in 2020. Okay, so this is how you actually can consider your support levels as a possible target level, which is more realistic, which is a better trade or trade selection to get into rather than to try and jump into all the trades. Okay. So as Razak was asking, I'll jump onto gold straight away. Gold has been one of those pairs that I've really enjoyed, right? I've really enjoyed. Good stuff. You think Aussie too. Great minds think alike, all right? So with gold, things to look out for here will be that big downward trend line, right? That big downward trend line when it turned down from, and this was back in March, from the 2069 or 2069 level, resisted again at 2000, resisted most recently at 1805 towards the downside. Bear in mind, for gold, we do have a very key support level here at 1680, right? A very key support here at 1680. Why so? It's because if I drag that right across, well, thereabouts 1680, this was a level that was last tested in August 2021. And again, if I drag it right across again, this was a level tested in March and again in April or March in 2021, August in 2021. It came very close in July, bounced back up, hit that trend line and turned down at this point at 1721, looking like we could see further downside on gold to come back down to test that 1680 support level, to test that support level again. In this case, if I did just a brief Fibonacci test, you can also see that this is on the daily time frame, right? It is breaking that support or that 6180 level. It is breaking that 6180 level. If we do see the day end below this point, then we could see gold trade down towards that 1680 support level. You made profits on gold. I hope you've been selling, or have you been doing short-term buying? You should only be selling gold towards the downside, especially how it reacts to this fib level here. We're looking for that downward move, similar to what we saw here on the 14th of July, as it broke below that point towards the downside. All right, so quite straightforward there. A couple of points to push gold down is that trend line towards the downside, the dollar index gaining strength, pushing the gold lower. All we needed now is, especially for it to close, even on the H4 time frame, it's closed below that point, right? Close below that 61.8 level. We could see it trade lower towards that 1680 support, key support level there. Alrighty, good stuff. Okay, so a couple more. Anyone asking for any other pairs? Nope. All right, just a couple more, and then seems like time has really flown by. Wow. Okay, US CAD is actually quite interesting as well. Why I say that is because US CAD climbed. This is on the H4 time frame. US CAD tested that 1.29 level on the news, pushed up towards that 1.30 level, currently at 1.3070. Similar to the dollar index, it looks like it's retracing a little bit, but it does look like we're going to see further upside on the US CAD. All right, so what I'm looking for here is for this to close higher from its current point. The next key levels will be one at 1.3222 and also an immediate target at 1.3166. All right, so those two levels were the high points that we saw back in July. You can see that if I drag this right across, this is a level that struggled to break above in July as well. So it tested, turned down, tested and turned down, similar. So this test and turn down is similar to this test and turn down. All right, so I'm looking for this push above that key level, that push above that key level to signal a stronger move towards the upside, possibly towards that 1.3166 level, and or even that 1.3222 level. All right, so in this case, as a possible trade idea, look for the candle to close upwards first, right? Don't rush into that trade, not ready right now, still sitting at that resistance area. Look for it to close towards upside. Then you could be looking for a possible buying opportunity, about a 670 pip take profit, stop loss about a 40 to, if it breaks up about a 40 pips, you're looking at a 1:1.6 risk reward ratio towards that first resistance level. If you did the second one, then you're looking at a 1:3 risk reward ratio towards the upside. Okay, so bear in mind that most of the pairs that we've been looking at, we've been highly dependent on the dollar, right? On that dollar strength to come through. Right now, tracing back down a little bit before pushing likely towards the upside. When trend is down, we use the Fibonacci from downside to the upside. No, it always goes, if I get your question right, it always goes from left to right. Right, so yeah, if it's that way, so for example, in this case, you could be looking at that move towards the downside as well. Here we just go left to right, from a high to a low, right? From a turning point on the high to a turning point on the low, just to identify some key levels. In this case, if it does turn down towards that trend level, it's about 78.6 or 61.8 level before we could see it bounce up again. Alrighty. Good questions there. Thank you for asking your questions. Anything else? Let me see. Still looking for a couple of these trade ideas to play out. Hey, Zoran, how are you doing? Good to see you back up again. I was wondering where you were. So good hello there. Alrighty. So with that, nothing much else across the board. At most pairs right now, just be extra careful. It is retracing. It is I wouldn't be looking to sell it yet because it's all retracing. Look at the euro dollar. I wouldn't be, in the way I look to trade, I'll be looking for it to move up, sit on my hands, wait for it, let it climb towards the upside, look for that rejection before looking to sell it towards the downside again. Okay, so not much to do right now. Possibly sit out, wait it out, and then look to sell it down. Possibly later into the session when we see the US come back in, if we do see that dollar index push up again. You can see now everything is tracing up because this is tracking slightly lower. I'm glad you chose to join this one as well, Zoran, so I'm happy you're here. Alrighty. Any further questions now? If you have been trading, I hope you've been trading well. Not a lot of trades to be had today, but just a quick recap for everyone. Remember that it might be a quiet session today, especially with the UK on a bank holiday for a summer bank holiday. But pay attention, we do have a bunch of news tomorrow, and more importantly on Friday, with the US employment numbers to be released, looking like we might see some strong numbers there, and that could actually give more impetus, more confidence to the Federal Reserve with their possible or most likely 75 basis point rate hike to come in the September meeting. If that does happen, then we're going to see further dollar strength again. Alrighty. So with that said, anything else? Let me see. Okay. The last pair, US Swiss franc, turning back down as well. So it's hit that level of almost that, or tested that 0.97 level, turning back down. I think it's going to be trapped within this range. In this case, you could actually look for it to come back down, test that 0.9625 level, bounce back up for that buying opportunity if we do see that dollar index strength come back in. Okay. All right. So with that said, I'll close up the session here. Got no further questions. Remember, trade well, trade safe. Watch out for the non-farm payrolls on Friday. So we do have some small news for the rest of the week, but the big one is coming on Friday. Look for that retrace to finish before jumping into your possible trades. US dollar at that 109 level is going to be very tricky. Look for what happened here in July. Let's see what happens here, where it's going to retrace and bounce back up again. Okay, so take care, trade well, trade safe, and I'll see you again. Bye-bye now.